Okay, good morning, good afternoon, and welcome back. It's been about 2 weeks, exactly 2 weeks, since we left trading, since we took a pause, a break, a much needed break, using price action as a gauge to understand when to participate in the market and when to take a break from the market. So, this was the this video will be about adjusting your life as a trader and your personal life. How to actually find the balance between it, because first and foremost, you as a trader, nobody in your immediate cycle should know that you are trading or you're learning how to do this, because they will discourage you from this because they do not see your vision, they do not see what you see. So you have to understand that. So you treat this as, you make this your personal business, and you don't allow this market to take much relevance in your life. You should understand that this is just the market, and there's a life outside that you are trying to build. There's your life that you're trying to build and make balance, because you don't want to, let's say you're a father, let's say you're a dad of some kids. Time flies very fast, very quickly, quickly, and your kids grow up fast. So if you are sucked up in this market, you can miss that. And when you miss times like that, those are times that you can't get back. You understand? So it is vital for you to know how to balance your time in the market and your family time with your friends time. You get, does that make sense? So from the on the 13th of May 2024, that is this year, the previous month, we noted from on the 13th of May that price will gravitate to this sell side liquidity. So this screenshot now was this markup, all of this lipstick here was made on the 13th of May. So we're looking for lower prices here, because when price rallied up here, people with the uninformed money that trade patterns and stuff like that, they'll see this as price going for buy side liquidity now currently, which that's not what the algorithm does. The algorithm does not just carry price to one direction. It has to engineer liquidity. It has to trick uninformed money to use them as liquidity to queue in their position to go for a future timing price. But that's, by the way, that's not what this video is about. This video is about when to know when to participate in the market and when to spectate or stay idle. So let's get right into it. So because we're expecting lower prices for the dollar and the ES has reached its high, let's see, as you can see, the ES the ES has reached its, let's take this off, we'll come back to this later on. So the ES has reached its high, its buy side liquidity high, and you don't want to be buying above an old high like this, especially on a higher time frame. You want to wait for price to come down to a discounted price level So because when the dollar was poised to go lower, the ES has already reached its high, its intended target. So that is price indicating to you that for the next few weeks, price will be choppy. It will be we have back and forth price action for the ES. Even though the even though while it's ranging, it will be ranging higher because our narrative for the our drawn liquidity for the dollar is lower. So now back to the algorithmic theory of why we expected lower price from the 13th of May. That is this week. This week's trading, we expected lower prices going down. We expected price to go lower. So because this market is 100% controlled, it is not buying and selling pressure that takes price higher. Do you understand? So buying and selling pressure does not cause the market to go up or to go down. If it was that, generally the retail will see this as a strong buy move. A strong buy move now that now the market is bullish. Even though the even though the dollar on the monthly time frame is bullish, we should always expect a form of retracement in price action. So because the algorithm we want to come back down to take out more positions to prevent these buyers here from profiting off this move to offload that will be wanting to offload here. So because the market is not moved by buying and selling pressure, this low is expected to be violated. So when this low is violated, the uniform money will see this as price breaking structure. Then they will label this as a market structure break. Meanwhile, price did not break structure to go down lower. Price will come down to purge out sell side liquidity because on the 13th of May we noted that what we are currently looking was for a purge of sell side liquidity before expecting higher dollar. That means we will not be bullish on the dollar going into from the 13th of May through May and into June unless we see a significant purge of sell side, then we can expect higher dollar. But because in this in this lesson, in this mentorship, we are only trading the ES, which is the US 500, because it has reached its high. If you look into your US 500 chart, it's advisable for everybody to use their US 500 chart, even though you are trading the ES futures contract. You should use your US 500 chart because that's what you are currently using, because that's what I am using to trade my actual account. So that's it. So you should use that, and so that it will be easy for us to understand our price points that we are talking about. So because we are expecting dollar to go lower in a bullish in a higher time frame bullish environment, the we expect the lower when price is coming lower, it will be choppy, it will be ranging lower. And if we're expecting a ranging lower dollar, that means that correlates with a ranging higher indices market. So during this time, everybody will be here trying to figure out where the market is trying to go to on the ES, and the market will be chopping up and down, up and down, and all the sessions, especially below the 4 hour time frame, all the tradings that will occur below the 4 hours time frames daily throughout this period of time will be full of choppy price action. It will be almost impossible for them to for for the uninformed money to understand where the price is currently trying to go. So they will be switching their biases every 15 minutes, every 5 minutes. Like their bias will be shifting. And if you're not the kind of person that can easily switch your bias when the chart has presents new information, it is best for you to stop trading within this period, because one of the first rule of this trading is for you to protect your capital. And when we say protect your capital, I do not just mean your account balance, your equity in your account, in your trading account. That is not the only form of capital you're trying to protect. You're also trying to protect your mental capital, because this whole game is all psychological game, it's all mental game. And the person with more psychological control and more that is more balance in himself, that is aware that this trading environment is suitable to trade in or otherwise, that person will perform far better than someone that is over impulsive, lacks patience and lacks discipline and don't know where to stay out of the market. So in the long in the long run, that the person with more patience, that has known himself, that is in tune with himself and knows his flaw and knows when to participate in the market and when not to participate, that person will have longevity in the market. That was a tongue twister. So, and that's what you're looking for. You're not here to gamble. You're not here to make a quick buck and leave. That's not what you're here for. If that's what you're here for, it's better like you just stop watching this video from now. Because what I'm trying to build personally, what my personal goal for this YouTube channel and this and the Telegram that you're all learning from, my personal goal is for each individual trader to be an independent thinker and be a long-term market speculator and long-term trader. And that requires time. Does that make sense? So that requires time. You're not here to gamble a quick box. You're here to understand when to participate in the market and when not to participate in the market. Whether you're a full-time day trader or you're a part-time day trader because you have a job somewhere or you have other things that's taking up your time, so you can only participate in the market part-time and not a full-time day trader, which is good because you do not want this market suck out most of your time. You see, there's there's a way Michael describes the marketplace. He calls the market a toxic lover that maltreats you every single time. Sometimes it works in your favor, you align with it, so it's like you're having the best relationship of your life. But when it's out to get you, or it seems, when it's out when it's hitting your time, it's like a vampire. It's like a weird relationship. When you allow it to take much of your time, you allow it to consume more of you, it will not be something beneficial to you. It won't be something that you like. So you have to know how to balance your your time with your family, your time with your hobbies, your time with your health, and whatever. You have to know how to balance that with this market. So back to the narrative on why we expected a ranging market for the ES, even though it will be ranging higher within the last 2 to 3 weeks. So because we're expecting price we're expecting lower prices for the dollar. Every time the dollar rallies higher, we see that as a manipulation leg to trick in retail traders that we are going higher because they are bullish on the dollar. Because they are still bullish, even currently, they are still currently bullish. Today is the what's today's date? Today is 7th of June. It's a Friday, 7th of June. They are still bullish on the dollar. We need to see them. We need to see the speculative uniform money change their bias to a bearish sentiment. Immediately they are bearish on the dollar. Immediately they change their sentiment from a bullish sentiment on the dollar to a bearish sentiment. That is when we are looking to participate in the market. Because see, from the week of Monday, the 15th of April, and the week of April 29th, there were relative equal highs that was created here. See, let's move this high a little bit so you see it. See, this relative equal highs now will be seen as a strong resistance level by retail. So, because this is a strong in quotation, since this is a strong relative, this is a strong resistance level, all of their buy stops will be resting here. So currently now, the sellers here, they will put their stop loss on top here. So already, because we are waiting for them to change their narrative from a buy narrative, their buyers from a buy sentiment to a sell sentiment, and we're expecting to get that when there's a purge of this sell side. We can just be going, it doesn't matter, we might not get this purge here because currently we had this here, we had price trade below here, but because the sentiment, I'm still watching the sentiment of the general public. So this is mentorship, this is actual mentorship, because we're using real-time price action to learn, where I'm using real price action to convey a message to you to understand how this algorithm reads price and how it books price. So that's why we are. So back to this. So once we get that shift in narrative in their sentiment that it is that the dollar is bearish, once you should pay attention a little bit, not that you should be consumed by social media or other people's opinion, because you want to be an independent thinker. You do not want them, especially when you've not built that level of trust in yourself. You shouldn't be participating in social media and other bullshit like CNBC and the rest, because it will interfere with your mental, it will interfere with your psychology, and you will start doubting yourself. So before you get to that level where you have developed a form of trust with yourself and you understand yourself, so you know yourself, before you reach that level, it is better to stay away from social medias and the rest. But you can still gauge retail sentiments just by looking at the chart. The chart can tell you how these speculative uninformed money are thinking currently, because you've been them, you were one of them, so you understand how they think. So if we are to get lower prices from on the dollar, I will be expecting a reversal on this. I will be expecting price to trade below this sell side liquidity here, and possibly to this weekly bullish order block, because this bullish order block, it is what is currently taking price higher. It is what is taking price higher from the algorithmic standpoint. So because we have this on this CBA, that the upper quadrants of it, the upper portions of it has not been filled. So that's our higher time frame long-term joint liquidity, the upper portion of this CB on the weekly time frame. So let's check the let's see the US 500.